In this presentation, we're going to take a look at multiple choice questions related to property, plant, and equipment. For more accounting information and accounting courses, visit our website at accountinginstruction.info. First question, depreciation. A, keeps the asset recorded at market value. B, can be recorded using an appraisal. C is the process of allocating the cost of equipment to an asset account. D includes the maintenance cost. E allocated the cost over useful life. So depreciation is the question. We're going to go through a process of elimination. So depreciation A keeps the asset recorded at market value. Now you want to keep this is an important point because it's going to be asked in multiple choice questions, multiple different ways, and it's important just to know in general that we're going to be allocating the cost, not really keeping in alignment with the market value. So in other words, our estimate may not line up to the market value going forward as we allocate the cost out, but we're still going to go through the process of allocating the cost out, not necessarily being in alignment with the market value. In other words, the market value could even go up and we would be writing it down because we're allocating the cost to the useful life. So it's not going to be A. B says can be recorded using an appraisal. Now typically when we think of the depreciation, we might use an appraisal in order to break it out between different types of like a lump sum purchase between like land and building. But typically we don't use an appraisal, we just use the cost. So I'll keep it for now in case there's no better answer. C is the process of allocating the cost of equipment to an asset account. So it is the process of allocating the cost, but not really to an asset. That's what we're going to record it at the beginning, and then we're going to allocate the cost to the expense, the timing accounts, when appropriate as we're using them. So that's not going to be C because it's not going to an asset; it's going to expense. D includes the maintenance cost. The maintenance cost is going to be included in the cost of the asset. It's not really going to be, it might be included, it's not going to be included in the cost of the asset unless it was used in order to put the asset into its useful life. The normal maintenance, if we're talking about an oil change or something like that, will just be expensed not as part of depreciation but separately. So it's not going to be D. E says allocate the cost over the useful life. And that seems most appropriate to what depreciation is. So we're left with B and E. So depreciation, either B, can be recorded using an appraisal, or E, allocated the cost over the useful life. And I think of those two, E is the more appropriate choice. That's what depreciation is going to do, allocate the cost. So final answer, depreciation, E, allocates the cost over useful life. Next question. Property, plant, and equipment useful life is A, estimated time it will be used in operations. B, allocating market value. C, is always less than 1 year. D, determined by the tax code. And E, determined by law. So let's go through this again, see if we can eliminate some of these with the process of elimination. Property, plant, and equipment useful life is A, estimated time it will be used in operations. That seems pretty good. It seems pretty because that's what the estimated useful life will be. Let's go through the rest of them, see if we can eliminate them. B says allocating market value. Now this could be tempting to us at first because we might be thinking, well, if we are having a useful life, that's kind of what it's for, is to allocate the depreciation. But note that we're not trying to get to market value necessarily. We are getting to the book value or allocating cost. So whenever something says market value with depreciation, be skeptical on it because we're not really trying to line up to market value. We're trying to line up the cost to the useful life. C says is always less than 1 year. Usually it's going to be more than 1 year because we're depreciating. The useful life will typically be over a year when we're talking about property, plant, and equipment. D says determined by the tax code. Now, if you were doing tax depreciation, not for generally accepted accounting principles, but for taxes, you have a lot stricter regulations in terms of what will be the useful life and what methods will be used. But when we're talking about bookkeeping, generally accepted accounting principles, financial statements, then it's not the case. So be careful there because we will often have two sets of depreciation tables, one for taxes, one for books, one for the purpose of whatever the tax code is, which could be many other purposes, like stimulating the economy and whatnot, other than just presenting the financial statements well. Whereas on the books side, our goal is to present the financial statements as most correctly as possible, as in the most useful way. So E says determined by law. And again, the tax code is kind of law, so that would, what is law? So those two would be similar in nature, and the only way this one would be true and this one would not be true is if the law was something other than the tax code. On the other hand, the tax code couldn't really be true and not have it be law as well. I mean, if this one was true, this one would have to be true because the tax code is law. So in any case, we'll eliminate those and we're left with A. Property, plants, and equipment useful life is A. Estimated time it will be used in operations. Next question. Which is not included when calculating depreciation? A. Cost. B. Salvage value. C. Useful life. D. Depreciation method. E. Appraised value. So if we go through these again, which is not included when calculating depreciation? A. The cost. Well, it's going to be pretty necessary. We're going to need the cost to calculate depreciation. And you might want to think about the most easy way to calculate depreciation before going about this would probably be the straight line method, where we would take the cost minus the salvage, and that would give us the amount to be depreciated, and then we're gonna take that and divide it by useful. You probably can't read this. Life, and that will give us the depreciation. So if we just take that calculation, say salvage value, well, nope, that's in there. That's going to be in our calculation. Useful life, well, we're going to need that in order to do our calculation on the useful life. Depreciation method, we're going to need to have some depreciation method. This would be the straight line method, but we're going to need some method in order to calculate depreciation. We'll need to know that. Now, the appraised value, you might think that we need that, and in some cases, we might use an appraisal, such as a lump sum purchase, where we're trying to break it out between land and building. But we don't need the appraisal value if we just have property. Like if I bought a forklift, the cost is what we're using, not the appraisal value. So the appraisal is not something we would typically need. So one more time, which is not included when calculating depreciation? E, appraisal value. For more accounting information and accounting courses, visit our website at accountinginstruction.info.